everyone. Those were the headlines, and let's now move on to our top story today. Well, early-stage venture firm Rainmatter by Zerodha has invested around 275 crore rupees in 47 startups last year, with climate and health tech startups receiving the largest share of investments in terms of volume. And since its inception, the Bengaluru-based fund has invested in over 100 startups, and that includes 32 fintech companies, 27 climate-focused funds, and 24 health tech ventures. In fact, it has deployed around 700 crores in total since its inception in 2016. To discuss the strategy forward for the investment firm, we are now joined by Dinesh Pai, the head of investments at Rainmatter. Thank you very much, Mr. Pai, for joining us this evening on ET Now.
No, pleasure, Sumita. Nice to be here.
Dinesh, first things first. Now, Rainmatter is also celebrating its 10th anniversary, I believe, in 2025. So congratulations on that. There couldn't be a more appropriate time to be having this conversation with you. But let's shift our focus back. Let's rewind a bit to 2024, because that was the year, Dinesh, when VCs became money-wise and, of course, capital deployment became tight-fisted. And that was due to a focus on profitability. Now, the kind of numbers that we're given to understand is that 275 crores were deployed across 47 startups. But do give us a broader picture on how those investments have shaped up, and how do you assess 2024 overall for Rainmatter?
Right. I think primarily 2024 was probably one of the better years. I think, after the highs of 2021, I think 2022 and 2023 probably saw muted participation from most of the VCs in terms of all kinds of growth rounds, right? I think people either moved up the rankings with even doing pre-IPO rounds, or moved down the notch in terms of, the fundraisers, etc., while doing, more seed stage, early stage, Series A, Series B kind of rounds. So for us, particularly, I think you spelt it out. I think the focus areas were, fintech, climate, and health. And some of these areas are probably areas which need patient capital and domestic capital, which really understand what these companies are trying to do. These are not really typical venture capital kind of models. Also, if you look at some of our climate companies like Akshay Kalpa, who are essentially in the clean food sector, also helping farmers doing better with their incomes, as well as organic farming. Similarly, Two Brother Organic Farms and bunch of other startups, I think, that we've invested in 2024 have done really well in terms of how they scaled up. On the fintech side, I think obviously the focus has been to help people do better with their money. So we focused on anything around investing, savings, insurance, even pensions for that matter. And on the health side, I think we've kind of scaled up significantly, mostly on the wellness and fitness front, mostly around enabling people to play more sports, have a healthy lifestyle. So some of the basics and foundational aspects. So across the portfolio, if you look at one theme, I think it's just been that we want to really instill good habits in people. Could it be, could be finance, could be health, could be even taking care of the planet for that matter. And I think we've just invested in startups and founders who've enabled doing more of that for more Indians.
Right. Dinesh, but how are things looking in 2025? Because like I said, you deployed 275 crore rupees, but what are the kind of investments that you're looking to make in 2025 across the various segments that you've talked about? And are there going to be other different sectors or segments that you're looking to invest in that have caught your fancy?
I think in 2025, the focus still remains the same. I think, the sectors that we really understand are these three particular sectors, and storytelling. I think, that's been one that, hasn't really gotten too much funding in terms of our portfolio, but, we're kind of backing more entrepreneurs who are inspiring more Indians. But the focus areas, I think, will predominantly remain the same, unless, something drastic changes in terms of our capability to invest across some of the other focus areas that might come into the picture. But if you look at how we're trying to deploy, I think the approach has been pretty similar across all the years since inception in 2016. The idea has been to identify and back some of the entrepreneurs who are doing well, and also not just for themselves and for their companies, but also for clients, and also for the general community at large. So the idea is to identify some of these companies and back them. And we don't really set targets in terms of how much we want to deploy and the kind of stages that we want to do. We keep that freedom and essentially have that decision making to a stage when if we end up meeting companies that really need a particular stage of capital, then we end up deploying that and essentially backing them up with whatever they need. So the approach remains the same. The focus areas predominantly remain the same. As I think we mentioned in a recent blog post that we shared, I think the idea is to back some of these late stage problems that are
Yes.
requiring more patient capital. The problems which will become mainstream in probably 5 to 10 years.
Yes.
So I think that's where patient capital really plays a larger part, and I think that's what we'll intend to do over 2025 as well.
Absolutely. And Dinesh, you're invested, like you said, in climate, fintech, health, storytelling, but you do realize that the bigger story that's playing out right now is how this consumption story is playing out. It's playing out rather magnificently. What do you make of this sector, and where are things headed on from here?
So I think obviously India has certain advantages when it comes to consumption, right? I think demographic plays a part. Our behaviors, I think, across not just metro cities, I think even tier 2, tier 3 cities, I think, has predominantly changed in terms of how we really engage with commerce. And I think brands themselves have figured out that there are obviously businesses to being built around niche customer segments. So all of that put together, along with availability of capital, availability of cheap labor, I think has played into this consumption story. I think hopefully 2025 2026 will keep that momentum going. I think a lot of the tailwinds in terms of how people are ready to spend, and how the digital infrastructure I think kind of has also developed, has played into plays its part in developing some of these companies. I'm sure there are funds who are out there who are looking at these sectors. For us, I think especially it has been focusing on sectors like fintech, climate and health, and we do have consumer companies in our climate and health portfolio, and I think all of them are essentially also wondering what really 2025 has in store for them. I think quick commerce obviously I think is something that they're all tapping into and figuring how can they really reach more customers. I think that'll be the play for more and more brands who are trying to reach customers more quickly, in the sense that there's already an infra layer there. You go build on top and at least experiment faster and
Absolutely.
essentially get that feedback loop going along. Yeah.
Right. Right. Dinesh, now I want you to zoom out a bit and let's focus on the global macro developments that are happening. There is a lot that's happening in the United States, most importantly, where there is a change in the presidency, and that would bring about a change in tariffs, interest rates, and then those kind of changes really change the whole investment philosophy and scenario. So what kind of changes do you really anticipate, particularly with respect to risk capital for emerging markets like India? And how is investor sentiment right now when you speak to your counterparts in the West or when you speak to global investors?
I think for India, the picture really remains the same. I don't think, at the early stage, not much really changes, right? Because it's a long-term bet of sorts. I think you're investing into companies who, probably in the next 5 to 10 years are gonna probably give you an exit. So not really thinking too much about the short-term implications of, certain taxation-related matters that you kind of mentioned. But I think, people are obviously wanting to look at the India story and, want to figure out, what is actually changing over the next couple of years. People are obviously bullish about how consumer segments have grown, how certain brands have grown, how certain product niches have kind of taken foothold in India also. So today, obviously there are D2C companies who are disrupting, brands that have been around for past 10, 15 years. So those trends, I think, will obviously get more and more investors coming on board and essentially backing some of the entrepreneurs who are making a difference. But I think, I was just speaking earlier to a few other folks. The majority of the ecosystem in itself in India that has come about over the past couple of years, because of all the things that we've gone through, I think is also a good factor. I think all the learnings that we've gotten, all the outcomes of things that have happened in 2021, 2022, I think has gotten discipline, as you rightly mentioned early on. While path to profitability is something that you really want to show investors, I think you also have to show that you kind of learn those lessons and are building the business on sound economics and fundamentals. And there's got to be some amount of predictability with where you're going with the business. I think those things will really help with investors coming on board as well.
Right. Yes, so Dinesh, you say that all of those things, path to profitability and how profitable is a startup, is going to be a key in determining the kind of funding that a startup gets, and that's the trend, larger trend that we've seen over the past, 12 to 24 months. But when you talk about like early stage investments or early stage startups are not going to have so much of an impact as to what's really happening in the United States. But what about mature companies, mature startups?
I think, I mean, for predominantly for most parts, I'd say, part to profitability is something that is expected of companies at the growth stages, right? At the early stages, I think people are still wondering, are you disruptive enough to kind of also disrupt all the brands that are out there or businesses that are doing similar stuff as compared to you? But I think, all the taxation, all the tariffs are probably much more relevant to companies who are probably exporting a lot more. But I think if you look at startups in India today, I think everybody is trying to build for India because I think your customer segment is completely different. While there are exceptions in terms of people trying to build for United States and Europe and some of the other geographies, I think, for the most part, you really want to build around the market and get feedback from customers who you're going to serve in the long term. So I'd say, while there'll be impacts here and there in terms of, cost of goods, if you're trying to import something, etc., I think for the large parts, if you're trying to build for the domestic market, at least from all the conversation that I've been having, I think not really much changes in terms of, some of these companies are trying to move on from seed stage, early stage to Series A stages also, because I think, that feedback loop kind of keeps growing as they keep adding, more and more customers in the domestic market, which still has room to grow. I think, the impact of some of these tariffs, etc., might only show up at a later point in time. So for the early stages, I think, it's still not really of too much impact, at least from what I hear from the ecosystem.
Okay, so in the near term, you say that there's not going to be much impact of what's really unfolding in the United States. On that note, let me shift our focus back to India and really talk to you about one of the buzzing sectors of 2024, and that's IPOs, which saw great interest, particularly new age companies. Now, there were also concerns with respect to froth building up in the SME segment, and that really has been flagged off time and again by SEBI. But what do you really anticipate for the sector? Do you expect long-term exuberance for the sector to continue in 2025, or there's going to be a bit of slowdown in that?
I think for the most parts, I think if you look at all the startups that are now who have filed their prospectus with SEBI, as well as kind of also prepared their investors to kind of go IPO, there have been learnings and at least a learning curve in terms of what is really expected of them before they go public, right? I think if you look at some of the companies that have already gone public, predictability and at least having discipline, where how you really run a company and decision making, etc., really plays a large part in some of these IPOs. So obviously, yes, I think you'll see a lot more companies going public. I think the public market appetite for at least having new age startups in the portfolio has also kind of gone up. I think more people want to support entrepreneurs in India, and they're realizing that some of these companies are backed by founders that they've looked up to, and I think they want to support some of these startups as well. So I think for the most part, I would feel there's absolutely a lot more activity that is going to happen in 2025. On the SME sector, I think, as you rightly pointed out, there's been a lot of noise around it, and obviously the regulator has kind of taken care of some of those issues with certain guidelines, certain regulations, and I think you should expect all of these checks and balances to essentially help that sector as well, and that is essentially needed too. I think if you're talking about main board IPOs, I think SME IPOs also have done well. So I think for a few exceptions, I think here and there, which have really caused some issues, I think for the most part, I think it's really needed for the market as well.
Absolutely. It is really needed to protect retail investor interest. On that note, thank you very much, Dinesh, for joining us here and sharing your thoughts with us on what really lies ahead for the startup sector in 2025. Appreciate you taking the time out and speaking with ET now.
Thank you so much.